Hello, trading has closed on March 25th, 2025. As always, we'll do our disclaimer, go over our calls, make our predictions. Also, I was supposed to have a meeting with Norm Winski today. For some reason, I can't get a telephone connection with him. I do have his notes, and I will go over them so you won't miss his change in trend dates. This is my trading plan for tomorrow, but I won't be trading. I'm going to be busy all day. Just remember, my calls can be wrong. Trade at your own risk. I had a few people today who asked me to send my webinar to them. I have no idea who these people are. I don't have their names in my database. I don't have their addresses in my database. Maybe they paid for the webinar and contacted me under a different name or a different address. I don't know. But if you want to order it, here are the instructions right here. My book is out of print, but you can still get it electronically. It's sold out completely. There was even a Chinese language edition, so if you speak Chinese, you can still get a copy. But you can get an electronic version, and they're cheap. So if you want to do it, here's how to do it. Well, here's what we said. We said this was a strong rally. It was possible to count 5 waves up, but there was resistance at the high of day. And I just wasn't looking for places to put on short trades. I think we're early in a wave 3 higher of multiple degree, and that's still my count. I'm still not looking to put on short trades, but we are at resistance. We'll come back to today's action in just a minute. I want to go over Norm's calls first. Norm comes on every 2 weeks or so. These were the dates he had a couple of weeks ago. These were the commodities. And let's see how he did. He did pretty well. Yellow means he didn't make a call, so there's no call there. No call in corn. No call in soybeans here. This is a winning trade because it's green. 2 winning trades in wheat. 2 winning trades in crude oil. Those are the green arrows. A winning trade in silver. A losing trade in gold. Bunch of winning trades in the S&P. 2 winning trades in T-bonds. You believe this? Here's the dollar index. I guess that's Australian dollar, British pound. No trade there. Canadian dollar, euro. This is one winner after the other. Japanese yen. He had 16 winners and 1 loss. 94% winners. That's about as good as I've seen anyone do, especially in an asset class like commodities. That's not an accident. Here are the dates he has coming up. The 26th of this month after the close, we're looking for changes in oil and silver. In the afternoon of the 27th, we have changes in stocks, T-bonds, US dollar, and gold. After the close on the 27th, changes in corn, soybeans, and wheat. And on the 28th, when there's a solar eclipse, we have a major change, trends in financials, grains, precious metals, oil, coffee. Oh, look at all this. Coffee, corn, gold, oil, silver, sugar, wheat. His stuff says the next few days could be some major trend changes. He can explain this a lot more accurately than I can. He's been doing this since 1975. And if you want to call him, here's his phone number, here's his Skype address. They're going to discontinue Skype, so you can call him at the Gmail address, at the Yahoo address too. All right, back to me. During the day, MEJT said this move was false, it wouldn't stick. That's retraced. said this drop was false, wouldn't stick. That's retraced. The target was to overtake this line. We did, so we stopped right at resistance. We're now coming to resistance from this trend line. That's a major trend line. We're going up straight to it. Now resistance either holds or it doesn't. If that holds, you could just back and fill. But what if we gap over it? If you gap over it and you keep it, then you've broken through resistance. Now this is my diamond on stilts pattern on the daily chart. Here's your stilt, here's a diamond, here's your stilt. It is very, very common, but not required, for these to go back to back, and even back to back to back. So now we have a stilt, here's a diamond that can be skewed, and now we've started a stilt. Now the origin of the left stilt is resistance. So we're stopping at resistance, and there's nothing that requires us to go any higher than this. But if we break through resistance, it's common, not required, but common for us to go up in exactly symmetrical fashion to the way we went down. Now, just as you can have many interpretations of Elliott wave patterns, you can have many interpretations of this too. It's just one pattern. But if we gap up a high percentage of the time, you're going to retrace this whole down move in symmetrical fashion, go back up to that high, where you'd find resistance again. So that's the reward. The risk is, if you go down, you could back and fill this area here without changing anything. So that's the risk, that's the reward. I think you'll know at the open if you're going to gap over this or not, and if you don't, I'd expect us to back and fill, and if you do, I can't promise we'll go up like this, but I'll think it would happen a high percentage of the time. Wednesday's pattern has the early high regardless of where we open. Typically it's a rally day with a high and fine lower, but if you fail, you drop in a straight line. Sentiment indicators at the recent low are seen only at major bottoms, so regardless of what happens tomorrow, I think we'll go much higher before this leg's over. We're stalling at resistance, and call buying has reached a level from which a correction would be credible. However, overbuying calls, that's a sentiment indicator. Sentiment indicators are not pinpoint indicators. They don't tell us what happens tomorrow. They don't tell us we can't trade higher first. It doesn't do that. Just says we're starting to get too much enthusiasm. So if that resistance holds, we don't know that yet, but if it holds, we could back and fill the gap from this week's rally before going higher. But if we maintain a gap higher instead as possible, I think probable but not required, that we retrace all of the February-March decline in a symmetrical fashion. Hopefully we'll know at the open which of these scenarios plays out. Now, I won't be around at the open. I'm busy most of the day. But if we gap up here and we hold it, it could be bombs away on the upside. And if we go down instead, I think the worst that's going to happen is we back and fill this area here. So it's the pattern with the early high, usually positive. Failure is a straight line drop. I think the open's going to be very informative, and that's today's call.